Good afternoon, everyone. Gabe Velazquez here with you, transparenttrading-solutions.com for a Tuesday, 13th of June. We've got a Fed meeting coming up tomorrow. Welcome, everybody. So yeah, we've got a Fed meeting tomorrow, as everybody obviously knows. So let me just let's start again with what's happening in the markets and let you know what I have a great class coming up here in options. And if you guys have been trying to trade futures lately, you know how challenged it's been. We haven't had any pullbacks. Typically, you get a burst and then just sideways chop all day, like was the case today. One of the things we've been focusing on and doing very well, of course, nothing works, and not all trades work and all that. We've been primarily focused under the surface. For instance, we're in an Oracle trade right now that's working really, really nicely in front of the earnings. We're also focused more on SPY, Tesla with options. Again, we're kind of maneuvering around this market where if you're watching the futures, the indexes every day, unless you're super nimble, you can probably extract a few bucks here and there. But over the long term, this whole day trading thing and short-term trading, as we know, is just it's just long odds, let's call it. For anybody trying to do this long term, it's those are long odds. One of the things that I'm going to start off with, we just had rollover in the futures markets and all the equity products, and quite honestly, I've been looking more at the SPY, because remember, the SPY doesn't have any kind of rollover, and kind of looking at that more or less as a stronger indication to where price is likely to turn. So I want to start off, if you have not looked at SPY, look at a chart of the SPY. And we, in fact, are sitting on the first quality level in the SPY. And you notice how we stalled out there. It wouldn't surprise me if we actually get a pullback from there. That level, if you look at your daily chart on the SPY, comes in at 436.59, 438.81. Okay, that's a really nice level there. If you pull up your daily chart, you can clearly see that it's inside a nice strong move. We every other level, as I've been talking about, there are no quality distribution supply levels, and thus you're seeing if you've been trying to short this market on any so-called supply levels, you pretty much have been blown out in the last 2-3 weeks. But now we finally, the market's getting stretched. We're finally getting up to some levels here that make sense. Going into the Fed meeting tomorrow, we got a CPI that actually took us up there. So look at 436.59, 438.81. Now, when you extrapolate to the futures, then the level on futures that would kind of correspond to that kind of looks very similar. It's actually the same level, would be the 44, right around the 44.36 area. You can look at that. We're not quite there on the futures on basis September. Remember, everybody should be trading September. So look at that possibly coming in. And again, I've been more focused on the Russell in the last few days, simply because if you look at the Russell, I think I've been talking about that, it's playing catch up, and we are having some much better movement in the Russell. We broke above 18, this 1830, 1825. We've had a really nice run up. We are, again, also coming up to some really nice levels in the Russell. So on the future side, in regards to the indexes, I would pay more attention to the Russell until we get some really strong movement into some quality areas in the NASDAQ. Clearly, the NASDAQ still driving, gotten really parabolic. We did get a pullback down to that 14,300 area basis June, and then we got a gap up, and now we're coming up to some resistance around 15,250. But all it is resistance on the NASDAQ futures. It's not what we would consider a quality supply level. And so that's again, we are getting fairly stretched, but that doesn't mean anything. The market could just, like it's been doing, maybe just consolidate and then keep heading higher. Um, and and shorting is probably going to have to come on the Nasdaq in particular from higher quality levels. That said, are have there been some great shorts in Oracle in like today with AMD? They had an event. It came up to 133, sold off about 6 points, so on and so forth. So if you look under the hood, if you will, underneath the surface, there are tons of opportunities, but you gotta have the skill and have the strategy to take advantage of that. And that's kind of what we've been focusing on at TTS and shifting our attention more to that because this other stuff is, it's probably going to change starting tomorrow with volatility very low, with the VIX down around 15, 13, and so forth. But hopefully that changes and we'll shift gears. But in the meantime, we're actually doing very, very well with our options trading at the moment. Okay, again, no guarantees, obviously, that would continue. But yeah, I'm having a class on that this afternoon, and in fact, it's already been sold out. So maybe I'll have another one if I have interest in that, to get you the ability to maneuver in different asset classes and not just be so one-dimensional. Okay, so that really covers on the indexes. Again, in summary, the Nasdaq still driving. We are getting a little bit of a broadening of the sectors, and in fact, I think maybe we're getting we'll get a little breather in some of these AI. I think we do have a little bit of a mini bubble going on there. So be careful chasing those names, the AMDs, the NVIDIAs, so on and so forth. Even Apple was down a little bit today after making a new high. So wouldn't surprise me if we get some kind of a breather and pull back in that. But I would be more or less focused on the Russell. Bonds, again, very important tomorrow. One key takeaway from the bond market is that the 10-year, all the treasuries were down today after rallying this morning. I'm looking at a key level on the 10-year, 112.5. You notice we're really close to breaking that down. If we break that down, that's going to bring the yield above 4. To this point, as we know, stocks have ignored that. But I think if we have a big break in the bond market tomorrow, maybe the Fed comes out and says something that upsets the market. I don't know. Maybe they're going to say, maybe they raise. Who knows? Everybody's talking about a pause. That's probably, that's the consensus. I'm sure that's probably what's going to happen. But it's I don't think by any stretch they're done. Inflation's still high, even though we had a kind of a milder CPI number. We're still sitting at around 4% inflation. Their target is 2. So that's still not even close to where they're probably going to pause. And again, we're seeing signs of other stuff. Rents are still very high and so forth. So I don't think we're out of the woods on that. But watch the 10-year. I think that's really going to be important. Now, also the dollar. The dollar kind of hanging around this 103.36. This will also have some really strong move tomorrow, I believe, depending on where rates go. If we have a sell-off in the bond market, rates start jumping again. I think the dollar goes back up again, probably takes out 104 and goes up to 105.5. We are in the midst of rolling over all the currencies. We have ECB on Thursday, by the way. This is the day after our Fed. So the European Central Bank will also announce their latest interest rate policy first thing on Thursday morning. And then that evening, we have Bank of Japan. And so, we're actually still interested in the yen. The yen has been kind of consolidating here, been trading sideways. as most of these currencies. The big moves again have been happening in the Australian dollar. That's made a round trip back and forth. The Canadian dollar has been very choppy. So as the New Zealand and Mexican peso looks like it's headed higher. But again, we still don't have the rollover. I'm waiting to get to see what the charts look like when we roll over on some of these currencies, which will probably happen in the next couple of days, to kind of get a sense as to where, obviously the dollar moving higher is going to push a lot of these currencies down further. But the only currencies that are the currency that's moving the most right now has been the Australian dollar. It went from 64.62 right back up to the top end of the range. So that's had some really tremendous move. Again, it came down to 64.62, but there wasn't an actual level per se in that. And if you try to sell or sell short any of those levels in between that down move from a month ago, you got blown out. So if you try to short any kind of rally or I'm sorry, any kind of distribution supply zone in the Australian dollar for the last several weeks, you've been blown out. And so this whole notion of range trading is still in play with the Australian dollar. Now we are coming up to some really nice levels above the 68.25, and that's what we'd probably be engaging on the short side in the Australian dollar. Okay. In the metals, not a lot going on. As you know, silver back down again. Gold, so silver, big choppy trading, similar with gold. Just back and forth between 2,000. It's about a $60 range, but no, I think we're looking for a breakout in that. I think we're probably going to do for a pop in that thing. It's been about a month and a half. It's been range trading, so it's probably due for something to break open here on gold. Interestingly, copper's been edging higher, but very choppy. Very kind of sawtooth. Again, kind of just back and forth in a kind of upward trajectory, but nothing spectacular there as well. But I do think I'm fairly bullish on copper long term, but we just haven't seen any kind of moves. Also, platinum looks like it's getting into some really nice levels around the 975 area. So we'll look at that. In regards to oil, as I mentioned last Friday, all over the place. Looks like we hit 69 and now we're right back up again, kind of in no man's land. Again, I would deem there's still a range market, possibly down to 62, up to about 76 for now. But yep. NEM ready to break out. I'm actually more interested in gold GLD rather than, we've traded NEM, but I like the pure gold play, which is GLD. If you look at that chart, it is kind of setting up for, it's been basing for about a month, almost 2 months now. So I think, sure. I mean, the thing with NEM is it doesn't. I mean, obviously there's a corollary with gold futures and with the actual price of gold, but it's not like 99%. You know what I mean? If you look at put those charts side by side, not exactly. So if I'm going to look for a move in gold, you could buy that, expecting that it's going to move higher or lower, but I would rather play the actual GLD, which is the actual or gold futures, right? So that's kind of what I'm looking at. NEM has some nice support around what, the 38, 39 area, something like that. Okay. And on the energy front, there's nothing really. Looks like if we break 240, it's kind of been back and forth, lots of choppy trading in that gas. Not really looking at that, just kind of taking a glance every day to see if anything pops on that. I mean, obviously, one of these weekends we'll have a gap, and maybe we'll get some movement in that thing. But it's been literally just kind of languishing between 220, 240, with nothing really to move nat gas at this point. That will change, of course, but when it does, then we take a look at it. But for now, not a lot going on. Also, the grain markets are really soybeans. Corn looks like it's starting to move. We're actually trying to get involved in corn. And again, just been very choppy. So even the grain markets have been fairly choppy. I thought corn was going to get ready to move, but looks like it's kind of backing off a little bit. So, the soybeans are actually, if you're involved, if you want to look at some markets that are moving, I think soybeans is something you might want to look at. The soybean market is actually probably poised to have some higher movement as well on that. But yeah, other than that, really, yeah, it's been, tomorrow, hopefully we get these indexes to start really, getting some kind of volatility. Remember, the VIX is closing around 14 and a half. So, we've had these couple of weeks where the VIX is literally just hung around this 14 to 15. I'm hoping tomorrow with the Fed, maybe we get some kind of volatility and get these things to move. Obviously, if you're long, you're okay. But all the action, again, we've been more focused on the individual stocks, like Oracle, Tesla. We're still using Tesla as a proxy for the market. That obviously still has a lot of movement. Looking at Lennar post earnings and doing really well with those type of strategies for the time being, until some of these futures markets really have some much better movement. We're going to stick with that for now. So in any event, yep, I think that's going to do it, everybody. Not a lot more to talk about. Obviously, I'll be back on Friday, and let's see what happens with the Fed and the ECB and the Japanese yen. I think those are the, obviously we still have that going, and looking again for some stocks and some movement in those, which we've had quite a bit. Okay. All right, everybody, have a wonderful rest of your week. Stay patient and disciplined. And again, these markets will test your patience and discipline right now, as you know. But I think if you're patient and you have the right strategies, you can still do okay. Okay. All right. Have a great night, and we'll see you on Friday. Okay. Take care.